are still more question marks than answers around forbearance. About how do you get into it? How do you get out of it? And what are the lasting impacts? There are people that need it. 100%. If you've lost your job, this is an opportunity to keep your family afloat. But if you don't need it, there could be consequences that you didn't think through. So I want to make sure that you know what I know. And note that everything is subject to change. We are not making our own rules, they're being made for us. But as we unpack this, here's where we stand today. So it's pretty easy to get into a forbearance. In fact, it's too easy. All you need to do is call your servicer, and a lot of servicers are reaching out to their clients. They're actually sending you letters or giving you a call asking if you want to go into forbearance. Well, the answer is yes, and you go in, or the answer is no. But it's that easy. You don't have to prove that you've had a financial distress. So once you're in a forbearance, or even if you call your servicer and inquire, or you start one and you keep making your payments, any of those situations, you're still in a forbearance. So now that you're in, how do you get out? Well, you have a couple of options. It's called a waterfall effect. So you're going to get the first option, which means you can repay the whole thing and bring yourself up to current immediately. It's not your only option, it's one of four. If that doesn't work, then the servicer and you will get into a conversation about the other three options, whether it's a payment plan, whether it's a deferred payment at the end, or whether it's a loan modification. Those are not necessarily up to you, but combined, you and the servicer. But what does it mean long term if you go into a forbearance? Because that's the hiccup that nobody's talking about. The CARES Act was very clear that a forbearance was not going to affect your credit score. And it doesn't, because it doesn't actually look like a mortgage late, but it looks like a forbearance. And if you have forbearance on your credit report, what the CARES Act didn't address is the fact that you no longer meet guidelines. Totally different. So yes, your credit score is great, but guidelines say that if you have a forbearance, you have to become current, and then you have to wait 12 months before you can get a refinance or a purchase loan. That's a big deal that nobody talked about up front. So what does this mean to you? So if somebody, maybe your servicer calls you up and says, hey, do you want to take advantage of this forbearance situation? You're selling your home. You think, oh my gosh, I could go 2 months, save that liquidity, help me move, help me set up my new home. Sure, I'll take that forbearance. But now when you go to purchase that new home, you no longer can. Or what if I'm a parent and I co-signed for my child, and my child did lose their job and they did a forbearance, which is what they needed to do for their family, but now that forbearance is on my credit report as well as the parent. So there are implications that we haven't even started to realize yet. And as we're unpacking this as we go, I've said this a couple times, I think we put the cart before the horse. We didn't realize all of the tracks that we're going to have to go through. Well, if you have a forbearance on your credit report, right now, the way the guidelines are written, again, subject to change, you cannot get approved for financing. So that means if rates do go low, and we're expecting them to go low, maybe 2.5, 2.99, whatever that is, that would improve your financial health and wellness. You can't take advantage of that because you have a forbearance on your credit report. So think it through all the way. Don't take a forbearance simply because it's available. But call me, let me go through those steps with you and what the risks are to you personally. And then you can make the right decision for you and your family. Nicole Rueth, the Rueth team of Fairway Mortgage, keeping you updated.